Alrighty, so we are into the next class of the ICT 2022 Mentorship Remix. I'm not sure which class it is. I lost track. Let's get into it. I know I've been kind of slacking on this series, right? And the reason for that, as I kind of already stated in the previous videos, is because there's a clear lack of interest in the series. It's just, I mean, these out of everything on my YouTube channel, these are the lowest. Like they hardly get any views, or they get very few views, but I still like to keep making them though, because even with that being the case, like even if there's one person that enjoys it, right? Even if there's one person that enjoys it, I'm going to help who I can, even with it, not being a very high performing series. The clear lack of interest among the majority. I know there's some people that just get a lot of value out of it, so I want to keep making the series, and I'm going to keep to my word, and keep making it throughout the rest of 2024. And so I want to go over a setup that we saw on ES and NASDAQ on Friday. So I was talking about this with my mentees the other day on mic, and it was very clean. It was just super clean, just all around, really nice price action on NASDAQ. So like first things first, okay, we figured that, NASDAQ was going to ramp up. NASDAQ and ES both were going to ramp up, and it's going to want to take care of previous day's highs first, because that's that draw. Like previous day's highs, like this thing's in that upswing still. It's been consistently pushing up super strong for a while now, and we understand that this is going to be a draw, that box of liquidity that's residing right there. So what happened though was it saved it for news, right? So like we saw this thing have like this, it spiked up to this high right here, like immediately from high impact news. And then it just slams off that level. It just gets demolished because, well, I mean, that is a big liquidity pool. That high, previous day's highs, is a super huge liquidity pool, and it sees a rejection as a result. See? So an uninformed, or let me just say somebody who doesn't really have a full understanding of the 2022 model may see something like this, and they'll think to themselves, okay, go short in a premium. You see this? Like there's a lot of traders. I know right away there's a lot of traders on Friday who were shorting this right here, because they saw this big flush and they're thinking, oh wait, there's the liquidity run. Look, there's a liquidity run that ICT talks about. There's a liquidity run right there. Oh, there's the fair value gap. Oh, look how explosive that thing is. It comes up to a premium. Oh, there we go. There's our opportunity to get in at a premium marketplace. Look for lower prices. Tagged out. That wasn't a good entry for, like, that's not something you want to short. And I'm going to tell you why it's not something you want to short. And this is where many individuals who trade that model get tripped up. Have a higher time frame understanding, because here's the deal. You can look at this lower time frame chart, and I understand, like, if you're looking like that 1 hour or that 1 minute chart and you're looking at this thing sell off, I can understand this thing looks so fucking weak. Look at this thing. It's just selling off, and just getting demolished, right? But when in doubt, zoom out. We saw this thing. May remind you, also influenced by news, of course. We saw this thing come down and take out higher time frame sell side. Now, look at the market structure here, fellas. This is bullish market structure. Look at that. It's pushing up super strong currently. That's bullish market structure. And now you have higher time frame sell side here. Also, I want you to take it a step further. Go to the daily chart. So as I've already stated, like it's also like it's still in that upswing. There's no swing high, really any indication that it does want to move lower. Yeah, it's taking on this buy side, but it's not really showing any bearish signature. And you see right here, once we got that close the other day on Thursday, we had that swing, or we had that imbalance put in. We have this inefficiency here now. That's going to be a draw. That's internal range liquidity. But once it comes down into that, it is support, because it's now rebalancing a portion of that price action from that explosive push up. These imbalances, they serve as support. So guess what? You have daily fair value gap support, and you got, of course, the 4 hour in there as well, imbalance. And you got our time frame 4 hour sell side. I want you to look at that. Really look at that. Really study that chart right there. Is that, guys, is that bearish? Is that bearish in the slightest? You really look at that thing logically here. Is that bearish? It's not. It's a bullish market structure, higher time frame sell side, higher time frame imbalance, and yet you're saying, okay, looks like a good short opportunity. Now comes no, of course it's not. Look at that thing. The higher time frames would have more of a say in what happens. The higher time frame is the true storyline. Okay, and you see this thing running out massive sell side liquidity coming down to a massive higher time frame imbalance while operating within a very bullish trend. Yeah, price is going to move in the direction of least resistance. The least resistance, it damn sure ain't lower. It damn sure ain't lower because it's already taken out higher time frame sell side. It's got this imbalance. So that's why it's important to have that higher time frame understanding, that top-down analysis, because then you can see, hold up, coming down to higher time frame support, it's bullish market structure. So I don't trust that this thing is going to hold up. That push lower is going to hold up. I don't trust that, because we understand the support that it's coming down into. So it actually gave a few setups. Okay, I understood that it's likely going to take out this high, as I was talking about on Friday. No, it kind of looks like I'm talking about this stuff in hindsight, but we were talking about it on Friday on mic. I figured, okay, it's probably to run up. It's going to take out that high. Okay, and right after you got that flush from the news, this is where you got the real ICT 2022 setup. This is where you got the real one. That flush lower right there ain't it. That ain't it. This one is it, because it's taken out, because you're aligned with the trend. You got to have that higher time frame storyline. You got to understand where you are in the bigger picture of things, and you understand, okay, I got higher time frame sell side, higher time frame imbalance, and shift. Look, and look at this. You got that fair value gap right there. See that? So you get that, of course, another imbalance right up there too. So look at that. 1 minute displacement. You got the strong close. You got the fair value gap. Short-term highs right there. It closes above it. That's a shift. That's a bullish shift. So how do you operate? How do you play this then? Well, look. Take your Fibonacci from that low to that high. Measure it. There you go, fellas. There is your discount marketplace. You enter right there. You enter right there. Stop beneath the low. You could target this high, low-hanging objective, or maybe take a partial out. Another way you could do it, another objective would be to take it up into like a premium within this range, just to play it safe. I figured it was going to ramp up and take out this high, but just to play it safe, you could just take it up to a premium, maybe take it up to this imbalance up above, get a little bit better. Or if you are, I guess you could say, really ballsy, or not really ballsy, but it's just kind of fits your personality better to hold for longer trades, bigger risk reward, and you shoot for this high up here, well then look at the risk reward that you get on something like that. I mean, just think about that, because it's available to you. And the thing is, like when you're looking at like that higher time frame chart, that 4-hour chart, you understand it's overall bullish. You understand it's taking out a higher time frame level. You understand all that, and then you get this move from news. Like that makes that a valid PT if you really want to shoot for that. It's a bigger risk reward. And also keep in mind, what comes with bigger risk reward typically is more losses. Nobody wants to talk about that. Again, I'm the what's the word? I'm like the poster boy for low-hanging objectives, right? I always tell you guys, take low-hanging objectives. I don't really tell you, but I say that's what I do. I tell you, like, okay, I like low-hanging objectives. That's what I do. That's what fits me. And I think if many people adopted that, they would do better. I do firmly, and I've seen it. I've seen it with my experience teaching countless people at this point. People tend to like psychologically do better with higher win rate, low risk reward type of deals. Okay. But guess what? Some people still gravitate to bigger winners. It just fits their psychology better. They're fine with, but here's the thing though. You got to be okay with having more. That's the whole fucking point. That's the, like when you do this, when you get bigger winners, when you're shooting for bigger winners and losses, literally that's, why are you worried about high win rate with that? Like it defeats the point, right? So, and I just kind of want to touch upon that real quick, because I see these people thinking, oh, I'm going to have an 80% win rate, 90% win rate with these huge risk reward, because that's what the Furu sells on. It's not the reality of this business, right? What you can make money with big risk reward, but the trade-off is there's going to be more losses involved, right? People that tell you that ain't the case, well, they're full of shit. I just put it, as bluntly as I can. Okay. So, but here's what's available to you. You could shoot for that. Look at that, fellas. 6-1. 6-1 risk reward that we're talking about. And that ain't like anything out of like, you're not forcing it. You're not forcing it. It's just there. Based on the market structure. Based on the market structure, you have that available to you because you understand. Higher time frames bullish, higher time frame sell side. You're aligned with the trend. Multi-time frame alignment, lower time frame shift. Seek that buy side. Because you understand there's going to be a big bucket of buy side or side in there. All right. And you understand the uninformed traders that see this say, oh, this is a short play. It's coming up to a premium. Their stops are right there. You got them. Because guess what? Those traders, they didn't pay attention to the higher time frame chart. Right? The novice, many novices, they're solely focused on the lower time frame, like only the 1 minute chart, only the 5 minute chart. That's something that you'll see commonly with novice traders with that lack experience is they're focused on like one time frame or just a lower time frame. All right. I don't see any trader in my time doing this that focuses on just one time frame that's successful. Okay. I'm just speaking about I haven't seen it. That just focuses on only one time frame. I have not seen a trader that is successful doing that. I see some gurus, promoting that with, no results to back it up. Just talk. But I haven't seen it. Okay. So that's like the kind of the key lesson here with today's video is utilize that higher time frame. Get the higher time frame storyline. It's going to help you. It's going to really clear up what the real storyline is, the higher time frame picture. So then you're not lost in the intraday noise. Okay. You're able to navigate around that manipulation that you see right there on the chart. You're not phased by it because you understand what's really happening because you get the higher time frame storyline. But somebody who's looking at the 1 minute, they see, oh, this is bearish. It's a short. Their buy stops are taken, and you're taking them. So that's how you could approach it. 6-1. Yeah, you don't need a high win rate if you're doing it like that. Okay. Or you could just run out this high right here, which is kind of more my style, just low hanging objectives, take your money, run, right? It doesn't it really comes down to you and the style that you prefer, but that's available to you. Now, we also had another one. We had another setup, which was on the 5 minute a little bit later because we had this thing pushing up here and then look right here. You see this at 9:30? What is 9:30 a key time for? 9:30 is a key time for fake runs, turtle soups. Like turtle soups, aka fake runs, little manipulation runs. A very common time that you'll see that is right at 9:30 equity bell. So meaning many times the first run that you see out the gate is a fake run. But of course, you need that full understanding of where price is drawing to. That's the important. That's what a lot of people don't consider. And then they wonder why they get tagged out repeatedly because they don't understand where that draws at. But we see this thing, we understand because we already did the work. We get the higher time frame storyline. And then we see this thing. It has this 5 minute shift. So you see this? Look how it has that close above the short-term high. Look how it has the fair value gap confirmation here. Look right here. So you have that. And now I see this thing immediately at 9:30 selling off. And I understand because this is where that time element comes into play. We talk about time. Here's a time element of price that you need to understand. 9:30 equity bell. It's a key time for fake runs. What does it do? It sells off first things first into where? Into where, fellas? Into a discount. That's what it sells off into. Look. Into that imbalance. Look. Bingo. Seeks to highs. Just like that. You got the 1 minute earlier, you get the 5 minute right there. That is a setup. You get two setups right there. You see? Strong close, fair value gap. Pushes down to a discount. Again, first run, so we understand that it's probably a fake run because it's right at 9:30 equity bell. It comes down to a discount, and then it seeks the highs, and then it seeks its high up here because, again, it's overall bullish, the higher time frame is. And that's what we had. It's just a really clean setup, and ES was clean as well. It's almost identical, the deal that we had over there. But yeah, fellas, I hope y'all enjoyed this little breakdown. If you did, leave a like, subscribe, and we'll catch you later.